If you like passive income and dividends too, make sure to leave a thumbs up so you support this video, and let anyone else know that is interested in this topic. Send them a link to this video, one of my favorite sources of passive income. Dividend stocks. These are companies that will pay you money. So imagine, like, without getting into the boring numbers, right? Coca-Cola is giving me 10 bucks every 3 months, right? So it's giving me, there's 4 quarters in a year. I'm getting 40 bucks every single year just by owning a share of Coca-Cola. And what's crazy about this is that if the market goes up or it goes down, I don't care because I still get paid my dividend. Before you buy any dividend stocks, there's a lot of research you need to do. First of all, you need to make sure you're investing in a good blue chip company. Number 2, a lot of people that get into dividend investing will chase the high yield, right? They'll look at these random stock names they know nothing about, but it says it pays 16%, get all excited and buy it. But what they don't realize is that most of the time, those stocks paying such high dividends will end up cutting their dividend, if not removing it altogether, and that company is failing. Because most of the time, why does a company pay you, a shareholder, a dividend? It's because at this point in time, they're making so much money, they do not have any other growth opportunities where they're gonna spend their money, right? So they're gonna get those excess instead of putting it in retained earnings and give it back to you, the investor, and pay it out to you. But when you look at a company like Facebook, Amazon, Tesla, these are all growth stocks. They still have lots of opportunity to grow. They're reinvesting every single penny that comes back to them, not paying out anything to shareholders to grow. The thing about these companies is that they're a lot more risky, because if it's not paying out a dividend, it's still in the growth phase, there's a good chance it could fail. Generally, I wouldn't ever want to invest in a company that's been around for less than a decade, right? That's just my general rule of thumb. That's just what I do, but you can invest wherever you want. But I like to invest in companies that have been around for more than 10 years, look very boring. I'm the boring turtle guy, right? When there's a turtle in the hair, I like to be the boring turtle. I like to buy companies like Coca-Cola. Oh, and I love Waste Management, AT&T, which is just ticker symbol T. All right, I like AT&T. I like a lot of these boring companies that pay me steady dividends, because when the market crashes, it goes up, I'm still getting paid all the time. That's what dividend investing is. Growth investing is when we're looking at like, Facebook, right? And then we've got these hybrids. Let me tell you about these weird hybrids that I really like. Okay, because I know most of these dividend stocks don't really find any growth opportunities, but they still act like growth stocks. And I'm talking about Apple. Apple's been growing massively and paying a dividend. I think it's like somewhere around 1.8, 1.9%. Not that great, but they've been paying, actually the percentage of the dividend doesn't matter because the price always changes. But Apple's been paying a steady dividend and growing. Same thing with Microsoft. All right, these are 2 of my favorite stocks that I've been holding, collecting dividends, but they've been acting like growth stocks. All right, let's say, I'm just gonna talk about a per share basis. So I bought a share for $160. For every single share I have at this moment, Apple is paying me 73 cents every single quarter. And I know that might not sound like a lot of money. The dividend's definitely small. Apple has been growing like a maniac. Apple's been acting like a growth stock. It hit 200 at one point. I don't even know if it's back there. I haven't checked recently. But Apple is acting like a growth stock, but still paying a dividend. So it's one of the few low-paying dividends I have. But it's just nice to get 73 cents every single quarter. It's like, I mean, let's just round it up. Apple gave me this. Apple just handed this to me. Like, here you go. Thanks for holding on to me while I grow for you, because in the long term, you believe in me. Thank you, Zach. Here's $1. I don't know what feels better than dividend stocks. I feel like it's the most passive income you can get. You literally aren't doing anything. You're just, you on a screen, on a phone, on a computer, you're buying a share of stock and then you're getting paid. You're not managing any real estate. You're not dealing with tenants and toilets. This is amazing. So Apple will pay out 73 cents a share right now. What do you do with this? You throw it right back in with this thing called DRIP. It's a dividend reinvestment program. It automatically will invest it back. Or if you don't want to, you can just hold on to Apple, keep getting paid, and reinvest it into other stocks, into other companies, right? Like Apple has bought me a share of Coca-Cola before, just from the dividends I've been paid out, and I use that to buy a share of Coke, and vice versa. The dividends from Coke might have bought me a share of AT&T. A share of AT&T stocks could have bought me a share of Waste Management. It just keeps going back in, and you see that compound interest stack up. Investing is so fun. I'm so passionate about this. If you don't know what dividend stocks are, if you've never heard of this before, comment down below. I want to hear. I'm sure you have, though. I'm sure we all have. Now, these stocks, penny stocks, I stay far away from. A lot of people, when they just get started out in the stock market, will always tell me about penny stocks and talk about this, especially after watching Wolf of Wall Street and seeing, oh my God, look at all this money you can make from penny stocks. But what you don't realize is for every one person that you hear making all this money from penny stocks, there's hundreds losing money. And I tried this out myself when I just got started. In fact, I have a video about how I lost $2,000 in 5 minutes trading penny stocks. Penny stocks are scary because of this. Okay, check this out. You see this graph? Most penny stocks look like this. When you look at their long-term, pull up the 5-year chart. I don't know if you can see that low. Pull up the 5-year chart, you'll see down over 90%, right? They're going bankrupt. The sketchy thing about penny stocks is if you buy it and it goes down, you can't hold like you would if it's a big company like Microsoft, right? You can't just buy more shares when it's down and invest for the long term. Nope, you can't switch to investing. Penny stocks are purely for trading. Anyone that holds a penny stocks knows they're gonna lose all their money because where is it going? To zero. 99.99999% of the time, penny stock's going bankrupt. That's why it's a penny stock now. If you buy it here and then it goes down, what can you do? Like literally nothing. You literally just lost your money, right? Because a lot of people are hoping to buy it here, pop it here, sell it, buy it here again, pop it here and sell it. It takes a lot of work to do this. And I know there's scanners. I used to be into this hardcore, right? There's a lot of chart patterns, technical analysis, risk reward, buy here, put your stop loss, but all that effort and time and energy, in my opinion, is not worth it, especially because I have to do other things with my time. I don't just have all day to sit around and do this, but maybe if I did have all my life to just sit around and trade, this might not be a bad idea. But for most of us, for you watching, you probably don't have all day to be trading with technical analysis. You just want to get passive income. You just want your money to work for you. This is not passive income. This is not investing. This is something totally different. A penny stock is basically any stock that's like $5 or less, all right? And these penny stocks that are trading for less than $5 a share are easily manipulated. A big whale can come in with millions of dollars, just a couple million, and influx the price and drop the price at their own will based on the amount of shares they buy and sell. Just like, supply and demand, basic economics, there's only so much demand and supply. The guy comes in, the big shark buys most of them. What happens to the price? Goes all the way up, right? Because it sees everyone buying. All this demand is coming out of nowhere, but the supply is the same. Because most of their market caps are super low. So, and by the way, a market cap is the amount of shares outstanding multiplied by the price of the stock. Maybe I'll throw a definition right here. But you see that the market cap's so low, there's only so much supply. The demand comes in with millions of dollars, spiking that price, and then pulls out his money, sells the shares to liquidate, boom, drop. They call this pump and dumps. Now, this is essentially Wolf of Wall Street explained in a nutshell. Jordan Belfort was pumping and dumping all these stocks to go around, call every rich person and say, yo, you gotta buy this stock. You gotta buy this. Oh yeah, this company's going crazy. He'd start getting rich investors putting in tons of money. They'd see the stock price getting pumped. And then, time to sell, boom, pull all their money out. But Jordan would ride the wave. He knew when it was gonna crash, pull his money out at the top, and just printed money. You as a retail investor don't have the inside scoop of when this is gonna happen. You're just looking at this, getting all this hype, and you finally hear about it here. You start buying in. This is where the retail guys come in, and boom, oh, you lost all your money. You lost, who got all your money? The whale that put in millions, right? The whale's right here that spiked this whole thing. It's called a pump and dump. All right, this is the big dump right here. This is the big pump. You never want to be a part of this. Look, if you take anything away from this video, stay away from penny stocks. Learn how to invest in dividend-paying companies. As you can invest in growth stocks, right? Like for me, what I would tell most people, I put 80% into dividends. All right, 80% of my portfolio will go into dividend stable companies I believe in, like Microsoft, Apple, Waste Management, companies like this, Johnson & Johnson, McDonald's. This is countless, okay? 80% will go into companies like that. Boring companies paying dividends. 20% will go into spec. All right, speculation, things like Facebook, Alibaba, companies that don't pay a dividend, but everyone's expecting to grow, that's my speculation right there. That's my window. I like these companies a lot. I definitely like investing in them, but I limit myself to 20% of my portfolio. I never want to take on that much risk, because when Alibaba goes down, or for example, Alibaba, which is a growth stock right now, when it goes down, I'm not collecting any dividends while it's down. I'm just sitting there with my hands tied together, waiting for it to come back. Any other big dividend company, I get that warm feeling of dividends coming in, right? These numbers coming in even while it's going down, even during a recession. There's a website on Google, I think it's NASDAQ Dividends. I'm gonna put a screenshot of the website to check the dividend history of every stock. So before I buy any dividend paying stock, you always wanna make sure that they've been consistently paying a certain amount and only raising it. You don't wanna see when they cut dividends, especially during recessions, right? Check like 2008, how was their dividend payment? Were they still paying their dividends on time? Did they cut the dividend? Did they raise the dividend? Did it stay the same? These are important things to factor in so that you can foresee in the future that, okay, this company has been paying consistent dividends, growing for the past 10, 20 years. They're probably gonna keep paying me dividends. So it'd be most likely safe to invest in this company and rely on for dividends. Stay away from those penny pump and dumps, all right? You're not Jordan Belfort from Wolf of Wall Street. I'm sorry to break the news to you. Unless you got all kinds of time on your hand and you wanna learn technical analysis, there's a lot of guys that, there's a lot of great guys I think on YouTube, like Ricky Gutierrez and stuff. Maybe you could check them out. But my advice is, or my opinion is, stay away from penny stocks, focus on those dividend stocks, and you can, speculate 20% in your growth stocks like Facebook, Amazon, and even a little bit in Bitcoin and cryptocurrency, because I invest in those too. But the bulk of my portfolio is dividend paying stocks. I just like getting paid while I sleep. I just like dividends coming in. What can I say? If you like passive income and dividends too, make sure to leave a thumbs up so you support this video, and let anyone else know that is interested in this topic. Send them a link to this video. I appreciate every single one of you watching, and I'll see you in the next one.